week, with the overall sideways motion picture changing. The slight gains of the USD in the past week seems to have activated gold bears given also the recent financial releases and monetary policy events. In this report, we aim to shed light on the catalyst driving on precious metals price and as the future outlook. Overall, we note that the Fed's hawkish intentions seem to be maintained, signaling that the bank may not be over with monetary policy tightening. It was characteristic that Chairman Powell, in testimony before Congress last Wednesday, more or less confirmed that more rate hikes lay ahead and stand that inflationary pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Furthermore, they reiterated that the FOMC policymakers expect that it will be appropriate to raise interest rates somewhat further by the end of the year, contradicting market expectation for rate cuts anytime soon. The Fed chair cited that U.S. employment market as being still tight despite some signs of easing. Overall, the Fed chairman maintained a clear hawkish tone in his testimony, yet at the same time did not add something new. Furthermore, during Monday's American session, New York Fed President Williams stated yesterday that restoring price stability is of paramount importance, potentially hinting that the bank may not be done with raising interest rates just yet. Should the bank's hawkishness be maintained or even be more acute in the coming week, we may see the USD getting some support, while such a development may set downward pressure on gold price should the negative correlation of the USD with gold price be in effect. On second note, we would also note that the course of UL's yields, as over the past weekend, yields tended to be on the rise, yet since Monday have corrected lower. Should we see US yields restart and maintain a clear upward trajectory, both for medium and longer term bonds, we may see gold price being seen under selling pressures as bonds will become more attractive investment destination given that gold is not interest bearing. We note as the next big test for gold prices the planned speech for Chair Jerome Powell on Wednesday. Should the Fed terms sound more hawkish than the market expectations, we may see the USD gaining, while on the flip side, they may weigh on gold price given that the negative correlation of the USD and gold prices is maintained. Furthermore, we would note the release of the final US GDP rate for Q1 on Thursday, as well as the US consumption rate for May and the core PCE price index for the same month. Last but not least, we note the demand for physical gold from Asia seems to be muted, especially from China, given the headwinds the Chinese economy is currently facing. Furthermore, we note the Chinese Dragon Boat Festival that may have kept buyers away for the past week. On the other hand, reports surface that demand for physical gold is rising in India, with traders selling gold at a premium. Also, an increase of footfall in local retail jewelry stores is reported. Gold traders are hoping that the easing of demand in China may be countered by an increase in India. Thank you for watching.